Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one interesting indicator named as break delay stochastic. This is one of a derivative of the stochastic indicator. Stochastic is a very well indicator known in the financial markets. It is widely used in the derivative segment along with the forex commodities and not to forget of course the stock. We will see how we can modify this stochastic indicator to better adapt it to figure out some false signals, because if you are well aware of the stochastic, you might have observed that when the underlying instrument goes sideways there is lack of momentum. In that kind of scenario the stochastic tends to generate many false signals. So to avoid that and to bring in more stability, we can use these delaying factor. So let us now get to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. Here is the USD JPY chart with each candle predefined at hourly. Let me add the stochastic break delay stochastic. If you type in here, we have this, and from the first glance, you can observe that this is a lot more stable. We have a lot more smoothing, and there is significant lag if we compare it to the price action and this signal generation using these two lines, the DDS line and the signal line. The use is simple to understand, simple to execute, just like the way we used stochastic indicator. The break delay stochastic is also used similarly. So when we have the indicator in extreme territory, that is above 80 on the higher side and below 20 on the lower side, and after having reached these extreme levels, if we see the signs of reversal coming into play, and if there is this signal line and the DDS line crossover in opposite side, then we start looking for the opportunities to go in with the flow and take that trade. So, for example, in this case, we had these output for the DDS line and the signal line both in the extreme levels or below 20, indicative of the oversold scenario for the underlying instrument. And after that, once some momentum started to show up on the chart, we had these DDS line crossing above the signal line. But if you observe on the chart, we have had this formation of lower highs and lower lows. So in this case, after the DDS line crossed above the signal line, the momentum didn't really change immediately. Rather than that, it remained kind of sideways. We had a fresh jump on the lower side, and only from that low there was pick up, and this spike was caused by the data release. So if you had gone for this trade after this DDS line gave you the buy signal by crossing above the signal line, you would have needed to optimize the entry point for the buy trade. And if you had done that, of course, you would have profited in this trade. Similarly, if we go back in time, here yesterday we had this extreme level reached for the DDS line, not really for the signal line. Signal line was below 80, and then this crossover happened. Here also the price momentum didn't change immediately afterwards. It took some time, and again there was this fresh spike, and only after that this decline came into play. But here we would have needed to keep in mind that this high was probably somewhat similar to this prior high. So even if you were to use that old principle of resistance, you would have in a position to profit in this trade as well. So the utility of this indicator is simple. You don't really have to spend much brain power trying to infer the signals for this indicator. There is a simple indicator with a simple message, and to avoid certain false signal generation when the underlying instrument goes sideways, like the way it happened here in early part of today's trading session. Even in that scenario, we are not really seeing multiple signals being generated. Only once there was crossover, it didn't really change the direction. The Euro USD JPY didn't really change the direction from here. Again, there was dip, and then only in course of time it picked up the momentum. So if you observe this chart, you will see that this indicator is quite helpful even while defining the with the trend trades, because even if the momentum remains on the same side, we see the indicator reaching these extreme levels. For example, in this case of USD JPY's up move, we saw that the USD JPY didn't really decline much. Rather than that, it was sideways, but we had this decline for the DDS and the signal line. Both went into this overbought territory, and after this buy signal was generated with DDS line crossing above the signal line, we would have been in a position to profit with this buy trade to be taken closer to this immediate low, and in course of time there was significant up move with gains of more than 2 percentage point from these levels. Then we also have to be mindful that if the trend is strong and the momentum continues in the same direction, even in that scenario, we will see these indicators generating some signals, and of course, some of the trade signals are going to go wrong. Any indicator is also going to make false signals. So same thing applies to the stochastic, the trade delay stochastic as well. This is also not a full true indicator. Even after adding these delay factor, we will still see some of the trades going wrong. But since there is a lot more stability, we will not see multiple trades being generated in a short span of time. Rather than that, there is going to be stability, and if the trend remains in the existing direction, and after the false signal has been generated, we will see that if we stop out in that trade, the stochastic will also give us opportunity to go with the trend like the way it happened. We again got these buy signals in course of time, and if you were to go for these buy signals, even though there was not much correction in the USD JPY, but still we saw these stochastic values reaching these extreme levels and providing us the opportunity to buy. And after that, the USD JPY did rally. So we have to keep this in mind that sometimes the signals are going to bring us a lot of money, lot of profit, but that is not going to be the case all the time. There are always three possibilities of the underlying instrument going up, 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 and up. It going nowhere, going sideways, remaining in a narrow range, and another is of course to nose dive, going to the decline, decline, decline. So, in all these scenarios, we can profit with the help of direct delay stochastic. All we have to do is study it well, be aware of its shortfalls, its drawbacks, and how to optimize our trades in light of these information. Because if you are aware of the shortcomings of this indicator, you would be in a position to minimize your losses in the eventuality of the trade going wrong or the indicator generating false signal. But if you get the trade right, then you will be in a position to profit on a much larger scale. So that is the whole point of studying these indicators well. Now let us see what we can do for editing these indicator customization. So we can vary this time period, the calculation period. We are using 13 as the calculation period. If you feel like you can make it even 30, you can make it 60, and as you increase this calculation period, you will see a lot more smoothing for this indicator. So here, this chart, this graph is looking a lot more smoother than what it was in earlier instance of when 13 was used as the calculation period. EMA period 8, we have this another option of varying the EMA period. So if we feel like we can increase or decrease it, let us try out 24. 24 stands for a day, and with that we have a lot more smoothing in place. So if you increase this calculation period, you will have the graph of the regular stochastic looking a lot more smoother, and if you decrease the EMA period, of course, then the data points which are collected for figuring out the output of the stochastic is going to be less, and it will be responding to the recent price fluctuations much more readily. Signal EMA period, you can vary the other component as well. Same principle applies. If you decrease it, you will see a lot more responsiveness. If you increase it, then there will be a lot more delay. Output, if you are happy with the color combination, you can keep it as it is, as you have been provided with all these color combinations and also custom color combinations, and you can play around and go for the best possible combination in your mind. The styling increase the prominence, you can go for a increased transparency factor, and it will look a lot less prominent on the chart. Level, we have these 20 and 80 as two critical levels in place for defining the oversold and over. So we can then go for the possibility of the trend change, initiation of the new trend, and profit from that. Advanced editing option, we calculate on new candle only, you can do that as well. It will pick up the output and it will remain the same throughout the current candle period. Highlight the time period zone, whatever is your calculation period will be highlighted if you are looking for the option. Calculate from custom data, you can customize the calculation with the instrument, candle period and side being given the option of defining it. So you can have these indicators output defined independently of the chart. Show indicator on all the candle periods. Whenever you want this indicator to be available only on certain time frames, you can have it. Else, you can have it on all the candle periods by opting in for this show indicator on all the periods. Base period doesn't really make much difference. So even if we vary, you can see that there is going to be only minor difference in the plotting. So this editing option doesn't carry much importance for this indicator. So that's all from my side, where I tried to use the simple uses, some of the classical interpretation of these trade delay stochastic and how it is different from the regular stochastic indicator, and what are its drawbacks. So we tried to go into these points and figure out the combinations which are likely to prove profitable for us. So I would suggest that you try it out, you carry out observation or long period of time, and using those data points gathered with the use of these indicator, you can go for the initiation of the trade for making money in the market. So that's all from my side. If you have any query or any idea to share, do write me the feedback, and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then, goodbye.